What's good, you guys? It's your girl Leo FX, and I'm back with another banger. I hope you guys are doing good. So as you guys can already tell by the title of the video, I will be telling you guys the difference between a funded account and a live account, right? So without further ado, let's get right into this video. So I'm just gonna tell you guys the pros and cons of trading a funded account, right? So let's start with the pros. Can we? So the first pro is that you get to trade someone else's capital and not your own, right? So what do I mean by that? You take your small amount of money and then you buy a prop firm challenge, right? So it's more like you are trading, for example, let's say maybe you are buying a challenge that is worth $5,000. So meaning you'll just take your roughly, let me just say $30 to get funds that are worth $5,000. With your small amount of money, you can get access to a much bigger capital, right? So yeah, that is the first pro. Second pro is that you are like risking a small amount of your own capital, right? So you are taking that $30 that we spoke about and then you use it to buy a challenge, right? And then if it happens that you don't pass the challenge, then you are just risking to lose that small amount of money, which is $30, right? Instead of you risking a big amount of money trading your own personal capital. So that's another pro of trading funded accounts. Let's go to the third. So the third one is that you can literally earn a large amount of money if you are consistently profitable, right? So which means you have to make sure that when you start trading funded accounts, you already know how to trade. You know exactly what you're doing in the market, right? So let's move into another one. Another one is that it teaches you how to be disciplined. You start taking calculated risk. You don't full margin and stuff like that. You don't barcode unnecessarily, So it teaches you how to properly apply risk management to your trades. Another point is that you can scale to a larger amount of money or capital if you continue performing well, okay? So you can also choose any package that you want. Some prop firms like Equity Edge offer packages that start from $2,500 all the way to bigger capital, right? So it differs from prop firm to prop firm, but what I know is each and every single prop firm also has a $5,000 package, which is normally the minimum. So yeah, guys, now that we know all about the pros of trading a funded account, let's now move to the cons. Okay. So the first con is that they have very strict rules. Like you don't just trade anyhow, okay? There's a rule called consistency rule. There's minimum trading days rule. There's maximum drawdown rule. And also there's a daily drawdown, So like I said before, it helps you to apply discipline and proper risk management because you can't risk losing the account all because you couldn't follow the rules. Do you understand? So you need to make sure that you follow the rules and then you'll be able to pass the challenges and also even reach the stage whereby you now request a payout. So the second one is that a single mistake can literally cost you your entire account, right? So like I just said now, you need to make sure that you follow the rules and apply proper risk management. You need to make sure that you risk like 1% in order for you to be able to keep your account, right? And continue trading from it. So the third one is that you will face a lot of psychological pressure, okay? Because now you'll be trying so hard not to violate any rules.
Yeah, so that's what we go through as, funded traders.
Try so hard not to break any rules and also to remain profitable as well, So that's another con, that it has that psychological pressure. And another con is that there's something called profit sharing. That means you are not going to keep 100% of the profits that you make from your account, right? Some prop firms offer a 90% profit split, and some prop firms offer a 80% profit split. So most prop firms offer 80%, right? So meaning 80% of whatever profits that you make from your account will go to you, and then 20% will be taken by the prop firm. So even if you can make $1,000 profit, you will only be able to take $800, and then $200 goes to the prop firm, of which it's not bad. I don't think it's that bad, you guys. It's manageable actually, because imagine you only risked $30 in order for you to get an account that is worth $5,000. And then when you make $1,000 from that $5,000, you just take $800, but you only invested $30. To me, that's like, I'm down. Let's do it. Okay, let's do it. So I don't think it's that bad, you guys. The only thing that traders don't like is being restricted, because it does restrict you to follow the rules and stuff. The last and final con of trading a funded account is that some prop firms have payout conditions that you have to meet, and also some restrictions. So for example, let's say maybe you go for an instant funded account, right? I'm gonna explain all the packages and stuff on another video. So let's just say you just got an instant funded account. It differs from prop firm to prop firm, right? So with the prop firm that I use, you need to make 3% as a buffer, and then you also need to make sure that you don't hold any trades over the weekend. So I think this one works well for people who are day traders and also scalpers, And then you are not supposed to risk more than 1%. There's a 1% rule, okay? And then you also have to make sure that your profits are above $100 in order for you to be able to withdraw the money. So yeah, like I said, it differs from prop firm to prop firm. Each and every single prop firm has their own rules, right? So that's why it's very much important for you to take your time and read all the rules, okay? So let's move on to the pros and cons of trading your own personal funds. All right, guys, so let's start with the pros of trading your live account, right? So the first pro is that you get to keep 100% of your own funds. You just withdraw your money and you keep 100% of the profits. That's good, right? Another pro is that there are no rules. There are no rules, you guys. You can trade however way you wish to, okay? If you want a full margin, okay? So yeah, that's another pro. So the third one is that you will have more flexibility. You can literally scalp however way you wish to. You can full margin, like I said. You can swing trade. You can hold the trades over the weekend if you want to. You can hold for weeks. You can hold for months. It's all up to you. If you trade the 1 minute time frame, you can do that. If you trade 5 minutes before the news or 2 minutes before the news, or yeah, you can literally do that. If you wanna close your trades 2 minutes after the news event, if you want to close your trades 2 minutes after the news event, you can also do so. There are no rules, none at all. You can also hold the trades for as long as you wish. depending on the account type and the broker that you are using. Okay, but you also have to keep in mind that there's something that is called swaps and commission, so if you continue holding for longer, you also have to pay the price for that. Okay, yeah, so that's what I'm going through because I'm a swing trader. I always pay the price for holding trades for longer. So the last and final pro is that you get to compound or to grow your own capital and not someone else's. Like whatever profits that you make are yours, fully yours. If you want to grow 1,000 rands all the way to 50,000 rands, you can do that. You can literally do that because the account is yours. There's no one watching your account and stuff like that. It's a personal account. It's yours. It belongs to you alone. So now we have to get to the cons of trading your own live account or your personal account. The first one is you are risking your own money. And we all know how much pressure we face when we trade our own money. Some people use their last money and they are like, you know what, with this last 500 rand, I need to flip it to like 2,000 rand so that I'll be able to do other stuff with that money, So that's the first con. And then the second con is that growing a small account can take you much longer. And we all know the situation we are facing in South Africa. It doesn't really allow one to just randomly fund their trading accounts with like $5,000, So yeah, we just fund with small capital, maybe like $100, and you have to consistently grow. You have to consistently compound that account, grow it bit by bit while applying risk management as well, Yeah, so that's another con, you guys. And then another con is that each and every single loss that you make from that account will definitely cut deep. It will cut so deep because, like I said, it's your own capital. It's your own money. And you alone know how much it took for you to actually fund your trading account, right? So each and every single loss, it will definitely cut deep. I can't lie about that. It will. Another con is that you'll be so tempted to overtrade, to revenge trade, and to not use proper risk management because it's your own money. And like I said, your emotions are so invested in this trading account because you just want to make money from the money that you've invested, So you'll definitely expect returns and high returns for that matter from that account, So that's another con. So the last and final con is that in order for you to be able to live off of trading, you'll be required to have a significant amount of money, You'll need to fund your trading account with like a decent amount of money, If not, it will take you much longer to compound and grow your trading account. If you're someone who doesn't have access to large capital, then you'll have no choice but to grow your own capital bit by bit, following proper risk management or doing it like the South African way, full margin, barcode, So yeah, it's all up to you. So now the question is, which one is better for you? I don't know. You know your goals, you know what you want, So I'm just gonna give you the two sides and you will decide which one you would go with. If you're someone who doesn't have enough capital, but you have proven that your strategy really, really works and you are a disciplined trader and you follow your rules, then I would definitely recommend that you go for a funded account, right? Because it will be easier for you to continue following the rules and continue following your trading plan And yeah, I think you'll do amazing. You'll do great. But if you are someone who has more than enough capital and you want freedom, you want to withdraw your money anytime you want, then you can definitely go for a live account. And yeah guys, that is all for this video. I hope you guys enjoyed it, and I hope you have learned a thing or two. And please don't forget to subscribe, like, and also comment something down below and tell me which account you would go for. Okay, and don't forget to follow me on all social media platforms. I go by the name of Lungile_LeoFX on Instagram, on TikTok, and also on Facebook. Okay, and don't forget to click the link in my description box in order for you to join my free Telegram community, and also send me a text on WhatsApp if you would like to join my mentorship. And that is all from me, and I'll see you guys next time.